Good morning, everyone. Welcome to the European crossover webinar. And we did go on to get some German data earlier, a couple hours ago. We had German import prices came in at 1.7% month over month. And then about an hour ago, we got Spanish HICP flash numbers, came in at 1.2%, with retail sales at minus 5.9%. And I thought I heard the spot guy say that there was some German data, but bear with me. But as I told you, this Reuters thing isn't showing everything under the sun but what I need. Let me just quickly go to the calendar. We did get German CPI number out of Battenberg. And CPI out of Brandenburg and Hesse. That's what's shown here. Okay, well, anyway, as I mentioned before, we're gonna have it's gonna basically be a new European crossover webinar, which will be focusing primarily on the technical analysis. You know, we always cover the bear with me, news stories and things like that. There's going to be a greater focus just on the technical analysis, and also new markets we're covering starts today, and there's the new buys chart. And it's limited because there'll be a greater focus on technical analysis. Many of these other markets that we covered, there's really no action. I was even doing if you want to go and look at those same markets, I did cover them in the Asian analysis, and they're not even moving anyway. So what we've now included is Bitcoin, SPOOs, Nasdaq, gold, and crude, and we'll still cover the key majors: Euro dollar, cable, Aussie, and yen, and of course the dollar index. But we've now pushed those others aside. They don't move that much. Sometimes, the sterling AUD has not been moving at all. And with a greater focus towards these other markets, and also limiting these markets instead of trying to cover, which I think is, 14 different markets, or maybe it was 16. I don't even realize. We have some extra time to spend on these other markets. And so obviously, like I said, some are not even, moving. When we take a look at, here's a good example. Look at the Canadian dollar. What are we trading? A whopping 25.78 to 26.11. So we're trading in a whopping, less than 30 pips. You see what I'm saying? So we're going to be covering, as I mentioned, all brand new markets. Not all brand new. We'll cover the key majors. And then, of course, we'll be adding Bitcoin, the S&Ps, the Nasdaq, gold, and crude. So without further ado, we're going to move into those. We will touch on whatever economic data we may have had or what we're coming up on the day ahead. Bear with me. I can take a look to see if there's any U.S. data. We do get German CPI at 8 a.m. Eastern. That's harmonized. And let's see. Case-Shiller at 8 a.m. That's a home. And we do have a speech from Fed Quarles. And also we do get consumer confidence at 9 a.m. And that'll be it. There's some reference about some sale of bills, and I think the same thing, Canada's selling some stuff too. But the focus will be just primarily on technical analysis with a greater focus on that. So let's go move into the euro dollar. Perfect. Look at that. Look where the euro dollar is at. Actually exceeded where I was looking. So hang on a moment. We actually came down to the 1732 level. Look at that. And actually I kept the support the same, which was 1742, but you can see actually they went straight for that 1732. Didn't even realize that they had that level, although I still probably would have given them the benefit of the doubt that it would have held the 42. But once again, there'll be a greater focus on the technical analysis as opposed to just, once again, when you're covering something like 16 different markets or something like that, and you're trying to do the analysis, you only get these short little blurbs, which just said the year started out the week with the closing slightly lower. Support will remain the same as 1742 with resistance at 1811. Well, you can see here they went straight for that technical, and as I told you before, I like to run my my levels coming across as many bodies, body, level, level, as many bodies in touch, what I refer to as touches. So I did keep the 1742 the same. The only difference is I did go and move this down to, I don't know why I put 1943. That was an error. It should have been 18, but it's actually was done on the upside. It's going to be 1812. And let me see if I can get this. It is still bearish, of course. But you can see that, as I noted here, we've kept this. I was looking for a while, I've been looking for a little bit lower prices in euro, really from the technical standpoint, because as you can see here, they not only broke, but the market was having a really tough time. Here's when they had that chance to really break out, looked like it was going to take off, and then basically it fell on its face, leaving this basically, I wouldn't even call that, if the wick, in a sense, you could call this a shooting star, although the wick could be a little bit longer because it is making new highs and then finish low like that. It's just that if the wick's not low enough to say it's necessarily a gravestone doji. So about here we could say, yes, that wick's a little bit too long for a gravestone doji. It could be a little bit longer to say definitively it was a shooting star, but really more of a shooting star. And then that was pretty clear as day right there. And then we fell off. And then ever since then, we never could really get back up. And that's once we broke below that. Remember our trigger before? It was the 1973. That's what triggered everything. Then we broke lower. We tried to rally back, but you can see the way this market was just not holding up well. So you get 3 straight down days. You get one solid update, and then we turn around and we post a dark cloud cover on that. So the door's been open for us to go lower. And then last week I noted about, I thought that the way the divergences between the U.S. and Europe, and of course with the new lockdowns, that it was going to really weigh on the euro, and why I thought we'd move lower. So hence, we've made this break lower. We'll see where we go there. And you could almost expect this to push lower, because remember last week I referenced the 1770 area here, because I was saying that was key on a weekly level when I ran my you can see right here, right there, ran these across, and the market ended up holding. You can see it just a little bit. Actually, the day before, I think it was on Thursday, it held it to almost to the pip or something like that. Then rallied or held, and then the next day it dipped. Friday, I thought it might break down to 1754, but it didn't. It kind of held that. I think it went to 1760, which wasn't that far off, and then we rallied up. But then we ended up, as I said, now fading back as we start the new week, which isn't too much of a surprise. My thought was, when we talked about this last week, I said, even if you're bullish at euro, you're going to say, you know what, I'm going to wait till it goes lower. There's no use of me picking it up now. Hence where we're at now. But I did have it for 1742. It looks like we did make it to that level 1732, and we'll see what happens. Maybe we could break lower, but that's where I had support here. As I mentioned, we'll be able to spend more time on key markets, not markets that are just simply not even moving or don't even move very much. We can spend a little more time on the breakdown, and each day will be a little bit different. Maybe we'll be able to focus on market profile, on certain currency pairs, or on gold, possibly crude, because we won't be trying to cover 1,001 markets, and also markets that simply just are not even moving that much. We can now move into the cable. Now you can see the cable under pressure. Now, yesterday, I did note on here, I shared, Michael Houston had shared that report about the Bank of England going after fleeing banks that are fleeing to Europe. And I said, oh, I think this is going to weigh on the cable. And someone said, oh, that's old news. Well, I know that was when it came out. My point is that it's basically, it's kind of like a reawakening, so to speak. It's like, things are, because the cable's been doing just nothing short of fabulous. But it was kind of like, we barely start to rally back. Oh, we're on our way. And then it's kind of like, oh, yeah, here's the Bank of England. Now they're trying to chase these banks, or trying to get, chase them, but before they chase after them, I should say, as they're fleeing to Europe. Not that wasn't already decided, but I've shared that in the room. I said, hey, that's collateral damage from Brexit. That's no news. But I said, you can't have your cake and eat it too. You can't ask for the break and then not, and now here's the fruits of that. Not that they had not been, I was aware that they had been, trying to think of the right word, but have been threatening, if you want to call it, like for a better word, that was going to happen. And of course it's happening. It's not that it's new news, but I'm just saying is to me, it just made it look, almost reminded me of what I said last week about Lagarde, when we were seeing these divergence of approaches, and the U.S. interest rates are moving higher, and what's his name, Powell, says he embraced it. I guess he wasn't that he was happy about it, he embraced it, says, oh, that just shows our economy's doing better. We're coming out of the woods, blah, blah, blah. And Lagarde was, acting like a maniac. Oh, the market doesn't understand this. It's overdone. And so I said at the time, it reeked to desperation. Well, that's what it reminded me. Well, some people said, oh, that's old news. That's old news. Well, I can tell you one thing, old news or not, the market was trading at 39.42 and the high was 39.45, and we went south ever since then. From the moment I said that, not that I called, I'm just saying is I saw it and said, wow, that looks bearish to me. And I said, well, I'm not saying right this moment. I just think in the medium term is bearish. And you can see here, look how the market finished. We had 2 solid days, and then we're opening up higher, and then we just fall flat on our face. So hence that we're at. But once again, here's what I'm talking about. New markets. Look at this. Even as much as cable moves, look at this. It's dead in the water. Look at this. It's trading 37.44 to 37.83. So not even 40 pips. So that's why, like I said, it's time to move to new markets that are going to be those markets that people are trading, and that we're seeing, a lot of, like I said, participation, where we're seeing reflective movement in there. So once again, so let's go and take a look what we have here for cable. So cable closed Monday with a gravestone doji. There you go. Dampening the recent rebound. Resistance for Tuesday will be 38.35 with support at 37.08. And let's go move into the odd. And here's another market. Look at yesterday's range. I mean, it was just, look at that. We just, look at these. Even these were okay ranges. Now this market just gone dead quiet. So let's get into the Aussie dollar. So the Aussie closed Monday with a doji. You can see that right here. Resistance for Tuesday will be 76.76 with support at 75.79. As I said, we haven't done a whole lot. This market does look like it's opening for a correction. I think Blake pointed out that he saw a head and shoulders here. It does certainly look like that way. We'll see how things play out. You would think that the Aussie might be doing better in light of where indices have been, but it's just kind of struggling. So it looks like it's open towards a little bit deeper move here. We'll see what transpires, but we're just simply not moving much. And I know we're on a holiday week, but today's only Tuesday. So, come on. I mean, we're just not even moving. Let's go on and move in now to the dollar yen, which that's a completely different situation. Whoa, we broke 110. Holy smokes. Well, I kept thinking we were going to get to 957. It looked like we didn't want to do it. And then we broke low, and I was like, forget it. Doesn't look like we can do it. And we took off. And we'll go and move to a weekly level. And this thing is just blowing and going. Holy smokes. Why? You should just go with the technicals, as we're saying. But this is what I shared. Let's do the weekly. There we go. So this thing is really taken off. And let me go back here. So the dollar yen continues its ascent. Resistance on Tuesday will be the weekly wick of 1006 with support at 927. Well, we're certainly moving higher. We'll go and move this back to 1006. And support was going to be 927. Certainly bullish. And when we take a look at this, here was that weekly wick that weekly level I was looking for the market to get to 957. And then we did run out of gas on Friday as we tagged this weekly wick here at 983. Now I thought, okay, we'll probably get up to 1006. We might even get a little bit above 1006. I thought we might pair back, but this thing's really going. So let's go to the next wick and see if we have anything here. So it reminds me a little bit of the guppy. Remember, we were looking at 50.27, I think it was, to 50.89. Never made it 50.89, but did get above 50.27, and then we fell back pretty hard by about like 300 pips before recovering. Actually, the guppy's right there at 51.72. So it might have been the 51 that was good. Matter of fact, maybe it finally is getting to that level. But anyway, that being said, if you look here, there's 1028. Hang on. And this is key because those are weekly wicks. $10.30. It's $10.30. So there we go, 10.30. So I would think you should see some pretty good pressure against 10.30 right there. We can actually go like this. Not going to change it because that's what I had before. I don't like to do that and just match it to where it was at that point to say, okay, there's the resistance. But I think that 10.30 you can see here is key right here. That's the last weekly high unless we run them up here. And then if it got beyond that, then there would be this weekly close, which would be 1082. But for right now, I think that should probably exhaust a few folks. 1030. So we've got here, right here, 1006, 1030. And you can see here, we finally got up to 957. We hit up here, ran out of gas at 1083. Come off just a hair bit, and we just launch up, and we're aggressive right from the get-go to start the week. So maybe we'll take a pause around this 1030. So with that being said, we'll now move into the cash dollar index. The dollar index continues its push higher. Resistance on Tuesday will be 93.10 with support at 92.51. Let's get there. There we go, 93.10, and let's go and take a look at that. And so when we were covering all these markets, I just had to move from one market to the next market to the next market. We actually have some time, and like I said, we'll start to, as each day goes by, depending on the market that may be moving, i.e., let's say the dollar yen, we may even start to take a look at the profiles on that to get a better idea, especially if the market's really moving about during the day, so we can get some better look at levels. But looking here, I did have 93.10, but this market is still scooting. And let's see right here. There's a daily chart. That is actually 93.13, but I thought I had it marked off as 10. But that's what I was going off of that right there. That body and those whatchamacallit, those wicks. So you can see here, and this is what I did in Asia, but I probably should have expanded it, but I put 93.10, but that actually comes out to 93. Right there, 93. It actually comes into 93.13. But I'll stick by what I said, which was 93.10. But you can see here that actually comes out to 93.13. Right there, 93.12.8, so it'd be 93.13. So we've already had a pretty good little run here. I'll go with that for resistance, but you never know, like the way the dollar yen's going. But the dollar yen's already pretty well stretched. So let's stay. I mean, I've got 93.10. I've got 93.13 as a level here. And then support, I put for 92.51. That seems a little bit too high to have it right there at that close, which would be 85. We try to keep things a little bit more realistic, and but 92.51 is too high. Also, remember that 92.68, that would now be support. So that, like I said, have to be realistic towards that. So it'll be 92.68, which is that key level, and of course it's bullish. Okay, now let's go on moving to some of these other markets that we'll talk about, and we'll start with Bitcoin. Let's go to that chart. Yeah, Irina says she likes a decision including S&P, Nasdaq, and Bitcoin. Look, those are the markets that are moving, and to me, it just feels like these the webinars have gotten, I'm talking about my webinars, has gotten stale because we're covering, all these markets that look, just keeping it real, that are simply not even moving. I mean, you look at some of these pairs and they're not even moving. I mean, I just showed you right there. What was it? The dollar cat is trading in a 38 pip range. I mean, it's a holiday week, but it's not like as if it's Wednesday or Thursday. I mean, it's only Tuesday. So that's what I'm saying. And these other markets are really moving, and they're more pertinent, I believe, to what we're looking at. So right now we'll start, with Bitcoin, and bear with me. So let's open this up with Bitcoin here. Open up this channel here, not channel, at the chart. And we're looking at the 2-hour chart. That'll be my main focus, although we will take a look at where we stand here on the daily. I don't want to switch to that yet. But you can see that we've been trading in this zone. Now, what I did was I just simply took the range and extended it lower for this move. And I was looking for a break down here to 49,000. We did make it down to 50, but we've since recovered, and Bitcoin has done very, very well. Although once again, I don't want to focus so much on just like not fundamental analysis, but looking at the other part outside of technical analysis. I really just want to I'll reference that for key things, a key report coming out or something like that. I kind of want to stick away from that stuff. But that being said, you have to respect the way that even when the indices were a little bit in trouble, Bitcoin has continued to hold up very, very well. So we're holding up here at the top of this range, and this range is 58,153. Just call it 58,150. And some of these markets are going to be a little bit different because when we look at Bitcoin, we'll have to use a little bit wider range than we normally would with some of these currency pairs. And then also we'll probably have like a first level resistance and a second level resistance, and so forth for support. So right now this is the key, and this key, this 58,150. So let's go and mark this off here. And remember, it is the top of that zone. So put an asterisk there. And for right now, it's holding up really well. If we were to get beyond that, then the next key area here, and we've traded fairly tight. We're not trading the way we were here when you could almost trade this thing intraday. Now this market is kind of quieted down. We're still moving about, but more of a quiet market. This is pretty solid resistance here. For right now, we're going to stick with that, the 58,150. And with support, you can see right here. Let's pull this up here. You see right there, where this hanging man is, right there, that body right there, and look, that's where they find support at. You see that? See this hanging man? Let me get rid of this part. See, we get this hanging man right here. Open that up. The market breaks below and really opens the door much lower, because remember, I remember us talking about this. We'd already fallen down here. We talked about this before this, I remember. And then you get this rally, we fall back, and then once we're on our way, and we post. It's not really a gravestone doji, but it does finish off the highs. So it's a bit disappointing. When you get this engulfing body, then it's over. Then the market's just barely hanging on. We dip down here and they come right back up. But when we engulf this, it really opened the door for them to really move lower. And look where they find resistance at. Back at the bodies. You see the touches here, as I like to call them, put up or shut up time, when you have to close a position. That's why I like to run them through the body. So that's where they ran out of gas right here. And then we fall back down. So we've been marching up, held up very well overall, but this 58,150 is going to be key. Now, as far as support right now, well, you can see that right now, and that comes in right there at 57,037. Let's mark that off. And maybe the market consolidates a little bit. But for right now, we're kind of stuck there. So let's mark this off. 57,027 or 37. And with that, we'll go and move into the SPOOs. Now, these are a little bit new here. Like I said, I haven't covered these. And the difference also with the SPOOs, I'll probably look at the other charts for that. It's hard to go on and say, you can't trade these like they're, I'm not gonna say you can't trade them, saying like it's not the same levels as with the currencies, because you swing quite a bit. Well, you definitely do a Nasdaq. But we're going to take a look at the key levels right now. We're looking at a 2-hour chart, which I think is key. We can look at 2 hour and 30 minutes, which is going to be our focus, so we can key in on these bigger levels. Because if you're just trying to look at a 5-minute chart, we'll have support resistance all over the map with about so many different levels. So right now, the biggest focus at this point is going to be right here, right there. They would need to get a pass beyond that. That is going to be $39.66. So that's going to be resistance. $39.66. And support, well, we've got this huge level right now. Right now, here's key support right there at 39.50. And we'll see whether we can go in and break beyond that. Beyond 39.50, and that's where we'll have secondary support. And we'll probably have to do some profiles and things like that. I don't want to have it that close. That is support, though. But let's see if we have something. That's going to be 39.39. And what we can do is we'll see if we can take a look at it on a profile. And let's go and switch to that. So we do have, here's the point of control from Friday. Friday was a bananas day at 39.22. And then and this is RTH, regular trading hours. So I don't look at the one throughout the entire session because I'm trying to see the key. So you can see we had these two value area highs right here, essentially at that 39.56 area. And we're right there right now. And then below that, because we said the 39.50, it's going to be right there at 39.44. I don't like placing it that close. But look at that. You've got a point of control right here. You've got a value area high, as well as almost a range high and a range high. Let's just go right there with, I'm going to move back to the other chart. $56 is key right here. I mean, it is a support level. I'm already there. And you can see the significance of 39.50. What we'll do is we'll go with 39.42. So it's going to be those are going to be the key levels. And For the most part, our analysis on the indices will be based on the 2 hour or the half hour, because once again, trying to put it in real close, this is a support area here, though. You saw that 39.56. We're trying to hold there. The low's been so far 54 and a quarter, so it hasn't been far off of that, but that'll be the key. Let's go move into the Nasdaq. We're pulling back here, Nasdaq. Here's the Nasdaq daily. We were close to breaking out yesterday. It looked like it might even try and follow through, but they're pairing back. We do have some key support here, 1283, 832. Let's go move into the 4-hour chart here. Once again, I don't want to put them too close. We're talking about indices that move quite a bit, and you can see how they whip around. We could be, far much further, but we can see here that it's here. For right now, that's going to be key 12,838, and we'll take a look at the 30-minute here. We still have this point of control, which held the market yesterday. I shared that in the chat room. They attacked that very early in the session after they initially rallied, and then this ended up holding. Ended up going long there. I didn't hang on to it for very long, but we saw that dip. Take a look at the profile here. So we're right now at 12,869. I have the point of control from Friday. That was 12,829. So that's huge right there. So we'll go with that 12,830 for support. This market is still, from a technical point of view, is still bullish. So, and resistance on the upside. There's a point of control from yesterday. Comes at 12,959. We're trading at 12,868 now. Let's go on and move back into the and you can see that confluence is here with this other point of control. Split the difference and call it 12,958. And that's that old number that we went through on Friday. And I was looking, I said earlier in the week, I said, if we can hold the daily, so we'll go with 12,956 for resistance. I don't know why it's not allowing me to select it. Hold on. Okay, good. Let's go and move into gold. And we've been bearish gold. Well, we're still second wind. Look at this. And we talked about this yesterday too. It was like, well, we talked about, well, it's just going to go lower. We said how, Bitcoin has stolen its thunder. Um, Boy, we really pressed lower here. You do have a body here, and that's confluence with this wick. So we'll go with 1695 for support today. And then over time, we'll look at 2-hour charts when the market's moving and take a look at profile and see what, once again, we're just trying to get these levels and get this in place, but we'll have more time to spend with the different analysis, depending on how the market is moving. And you can see here, we've really dropped off. Resistance is going to come. You can see this wick here and this wick here. That's going to be 1705. And look, sure enough, that's a good level there too. Look at this. There you go. It's perfect for resistance. And let's go move into the crude oil market. And I do like taking a look at this on a 2-hour chart. Actually, it was a 4-hour chart. Yeah, that's what I was saying before, is that you almost have to use a 4-hour chart because of the way this market moves. So resistance, you can see all these wicks coming across here. 6174. Boy, that is right on top of it. Hold on. $61.74. Support on this pullback. 60.64. Still like a little bit lower to that, which is 60-60, and then we'll take a look, see if we see anything on the profile. Oh, wow, look at that. There's yesterday's point of control right there, 60-63. There you go. And look at this point of control there, 60-58. So there we go, 60-60. There we go. And there's the bias chart for today. And the only thing is this would be bullish. That's not bearish. Gold is definitely bearish. Bullish, 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 range, bullish, bearish. There we go. So there's the bias chart. The new updated markets with the new European crossover webinar with a greater focus for technical analysis with new markets. So thanks for joining us here. I'll get the bias chart posted, and thank you very much.